In the name of Paul Goldsmith.
Mr. Speaker, thank you, Mr. Speaker. My question is to the Minister of Finance and asks, what reports has he received on progress in lifting New Zealand's household savings and reducing household debt?
The Honourable Bill English.
Mr. Speaker, the latest available data comes from the year to March 2011, which shows that net household savings in that year were 0.2% of disposable income. While this is modest, it is the first annual positive savings rate since 2000 and only the second since 1993. Treasury forecasts an increase in the household savings rate from 0.2% of household disposable income to 3.9% by 2016. This higher savings rate and the reduction in household debt is expected to be helped by continued restraint on consumer spending, which of course is not such good news for the retail sector.
Paul Goldsmith.
Speaker, supplementary. What impact has the recent increase in household savings had on household debt?
The Honourable Bill English.
Well, Mr. Speaker, the household debt did grow quickly through the mid-2000s. However, since then the growth has since slowed and started to turn down, helped along by New Zealanders being careful with their money. As a result, household debt as a percentage of disposable income has fallen from 155% of disposable income in 2009 to 140% today. So that's quite a significant reduction. The level of household debt, however, is still high, and I would expect New Zealand households will continue to pay down their debt.
Speaker.
Paul Goldsmith.
To the Minister, given the improvement in household savings and the fall in household debt, what factors are behind forecasts for the current account deficit over the next few years?
The Honourable Bill English.
Mr. Speaker, the current account deficit is forecast to go out to 6.7% of GDP by March 2016. This is still significantly less than its peak at 8.7% of GDP in 2006. The forecast widening of the deficit will reflect a couple of factors. One is the Christchurch rebuild, which is being part financed from overseas insurance inflows. Statistics New Zealand estimate $15.7 billion of reinsurance for Christchurch. A second driver of it will be increasing business investment. That is where people are financing investment in their own businesses, which will generate future income.
Andrew Williams.
Mr. Speaker, supplementary to the Minister. Has the government any plans to ensure more household saving is invested in New Zealand-owned financial institutions rather than foreign-owned banks, and if not, why not?
The Honourable Bill English.
Well, Mr. Speaker, there is a bit of a trade-off in this respect, where large investors such as the New Zealand Super Fund and ACC have investment policies which include diversification of their holdings. Now, both of those funds are so large that they've probably invested almost as much as they can in the New Zealand stock market, and though they do invest a considerable amount of their funds offshore, as a rational investor probably would.
Question number 2, Eugenie Sage.